Okay, so today we do have Tariq hopping on this call to co-host with me. He's going to be going over the MA crosses. And but first, so for those of you who don't know me, or if it's your first time on this call, so my name is Kacey. I'm 19 years old. I go to St. Mary's University in San Antonio, Texas, which is where I currently am. So if I cut in and out, I apologize. The Wi-Fi here is not the best. Actually, the entire dorm isn't the best. Right now, I'm pretty sure, I'm like 90% sure that our heater just went out and I'm really cold. But anyway, a little bit more about me. So I'm 19 years old. I'm originally from El Paso, Texas, but I go to school in San Antonio. I've been trading for 6 months, almost 7 in like 2 weeks. And this strategy, the two strategies that you're going to see today, well, one of them is kind of a little bit adapted, the one that Tariq is going to show you guys. But the two strategies that you're going to learn today are two of the simplest strategies you can start for beginners. Those are originally why I started, because they were two of the easiest ones, the easiest strategies that I was able to pick up on, and I was able to run with them. So that's how I got started with teacups and like how I started doing my calls and everything. So that's pretty much the information you guys are going to get today from these. You guys can ask questions. Feel free to write in the chat. But so to get started, right now I'm going to invite Tariq to take over. I'm going to make him host. He's going to be showing you guys his own variation of the MA cross strategies. So the other day, I don't know if you guys were on his call, but he did the MA cross strategy, and the way he did it and the way he added another confirmation like really blew my mind. So I really wanted him to share it with you guys. So if you don't know Tariq, so he's been trading with IM for I'm pretty sure like about a year, and he's just been mastering the charts, the harmonic scanner, sending everybody signals and stuff like that. So definitely, like, if you're struggling with anything, definitely reach out to Tariq. His energy is insane. It's crazy. And yeah, so I really did want to get him on this call. That way we can like change it up a little bit and show you guys how he does the MA crosses, because it's amazing. So Tariq, I'm going to make you host. That way you can share your screen. Okay, you should be good.
Yo, what up, what up, what up? Thank you, Kacey, for having me on this call. What's up, everyone? Yeah, I'm extremely hyped right now. I don't know if y'all were in NZD USD, but that thing just shot through the roof. I know if y'all were in my group chat, I called that for a buy. Yeah, if you were on the group chat, I called that for a buy for a clean 40 pips. I forgot to put my stop loss, so yo, I just called, yo, if you were NU, drop some fires in the chat. If you were in anything that had NZDUs in it, you should well be in profit. And it's crazy because I was gonna tell the team to sell GN earlier, and yo, we would have made real bank, but it happens. I don't know why. I've really been on my bully on these charts, but like I said, y'all, thank you for having me on this call. So yeah, like Kacey said, I'm gonna be going over the 450 moving average strategy. That well, we both got from Lozado, but what I did was I found a confirmation to go with it. And here's the NU trade that just happened, y'all. Sheesh, how many pips did I catch? That was like 78, bro. That was crazy. That was crazy. Yeah, y'all. So, and it's crazy, y'all. I was gonna call this out earlier. Team, I really apologize, y'all. I really apologize. And just before we go into stuff, this is why you need to trust yourself. You need to trust your trades, because this is the stuff that happens when you do not trust yourself. And this is GN. If I forgot, yo, this is over 200 pips, yo. Wow. I feel hurt right now that I did not take this trade, because this was a clear, guys. This was a clear M. Yo, this was a clear M, but yo, yeah, that's what I saw. We was thinking about doing it, but you were right, yo. Whew. That would have straight in the profit, yeah. But all right, y'all. So going into the 450 moving cross, so y'all, this is really simple, very easy strategy that I use. So as you see those lines right here on my screen, I'm going to show you guys how to set them up and how to properly use it. Before we start, let me close this out and then those alerts. All right, boom. So guys, check this out. The 450 moving average, right? It's pretty simple. you're using two indicators, right? I can't keep looking at this. It hurts my feelings. So use two indicators, right, to pretty much get this set up, right? So you're on your trading view. You go to indicators and strategy. Okay? So what you're gonna do is you're gonna type in MO, right? You're gonna get moving average. That's the first one. And you're gonna get moving average exponential, all right? Moving average, the moving average exponential. If you have any questions, feel free to type it in the chat, right? After you get those two things, right, you're gonna have these two lines on your chart, little squiggly lines. Now, what we're gonna have to do is we're gonna have to modify them, right? So here's what we're gonna do. We're gonna go to the first one, which is moving average, right? We're gonna go to settings, all right? So for the input for this, right, you're gonna change the length from 9 to 4. For the moving average, right, you're gonna change the length from 9 to 4. Then you're gonna go over to style. Now for my style, I like to keep it orange, but I increase the thickness because the line you can see, it looks really flimsy, but when you increase the thickness, it's way easier to see. So I'm gonna repeat this one more time, guys. For the moving average, you're changing the length from 9 to 4. And for your style, you can make it whatever color you want or however your chart looks, but make sure you do increase the thickness so the line is easy to see. All right, after that, we're done with the moving average. Now we're gonna go to the second one that says EMA, which is in the left side of your corner, left side of your screen, right? We're gonna go to EMA. We're gonna go to settings again. Now for this, you're gonna change the length from 9 to 50. All right, you're gonna change the length from 9 to 50. And then you're gonna go over to style. Now for my EMA, I like to have it black. And again, increase the thickness, very easy to see. Got your is really straightforward now. So the way you use the moving average strategy is you're simply just waiting for a cross to happen, right? You're waiting for a cross to happen. And here's a great example of a cross, right? So your moving average, right, which is my orange line. Sorry. Your moving average, right, which is my orange line, right? When this crosses the EMA going down, you sell. Yeah, they can't see your screen. They can't?
I can see your screen.
Oh, I was about to say, don't tell me I was, someone who can't see my screen. Can everyone see my screen? If you can see my screen, Kacey, you can see my screen, right?
Yeah, I can see your screen.
Oh, all right. Never mind. Sorry, y'all. So, Bet, going back to this, right? You're simply waiting for the moving average, right, to cross the EMA going down. All right? So, look right here. We had a cross right here. The moving average crossed the EMA going down. So, for that, we would have sold. We would have sold all the chef. Because right now, what that cross is telling us is that momentum is heading downward. And as you look at the history of what happened, price was definitely heading downward, right? Now, guys, it's going to be the same thing when price is going up, right? When the moving average crosses the EMA going up, you buy, right? Now, that's pretty straightforward. Moving average crosses the EMA going up, you buy. Moving average crosses the EMA going down, you sell. Now, does anyone need me to go over anything again? Unmute yourself. Type it in the chat before I continue about anything
I
that
have
I'm
one
going to
question.
Yeah, go ahead.
Before it crossed the second time, there's like a curve, and then it crossed also, if I can see correctly, crossed a little
You
bit.
talking about this one?
Yes.
Yeah, so it crossed one time, and then
Uh-huh.
it crossed again.
Right. How could you tell if it was like going up or down based on the first one, but then the second time it crossed down? Does that make sense?
To be honest, to answer that question, I like to wait for a clear cross to happen. So
Okay.
this one looks like it could have been a clear cross, so it could have, it could have got us. Now, understand this though. When you get into this trade, right? You take this trade. Let's see if you would have got. If you would have got in right there at that cross. All right. So when you take these trades, you have a 20 pip stop loss. That was it. The highest it went was 13 pips. So you would have been good.
Okay.
All right. So either way, you would have been good on this trade. Like this is not 100% strategy. Just understand that. But yeah. All right. Now here's one thing though. No problem. So when this cross happened, I like to have confirmations, right? So what I do to confirm whether or not this is a valid trade for me to get in, I wait for the cross to happen. So let's look at this one. I wait for the cross to happen. Then what I do is I change my candlesticks to, I believe it's called the Hikanashi, right? Switch it over, right? So boom. As you can see, oh, this is a perfect example. Perfect example to the question of whoever that was who asked that first question with the two crosses. But let's focus on this one, right? You have the cross, right? Now, guys, I want to point out something. When this cross happened, right, the Hikanashi tells you momentum of price, right? And that's pretty much what this strategy is. It's a momentum of price. When the moving average causes the EMA going down, that means momentum is downward. When the moving average causes the EMA going up, it means momentum is bullish. Now, you want to confirm that, right? So as you see right here, right, the cross happened, and we changed our candlestick to the Hikanashi. When you're looking for a buy, guys, you want there to be a flat bottom on the candle. That confirms our buy. All right? That this flat bottom confirmed our buy. So since this cross happened, you see a flat bottom, you get in. Now, let's go to the second example when we saw the two crosses happen, right? Boom. Now, this is a perfect example, right? We had the first cross, but look. So if we're looking for a buy, if we're looking for a flat bottom on a buy, that means on a sell, we're looking for a flat top. So look what happened. We have the cross right here. Oh, that was ugly. We have the cross right here. But wait, Tariq, there's no flat top. Guess what? No sell. So you wouldn't have had to deal with that drawdown. Now, so a few hours later, we come back to the chart. Wait, we had another cross. All right. We had another cross right here. Cool. We're on the candlesticks. Wait, but Tariq said change it to the Hikanashi so I can see what momentum is doing. And since we're going for a sell, I need to see a flat top. Can you switch it over? What do we got going on? What that right there? What was it? That is a flat top. So boom, you would have gotten this trade because you know momentum was down and you wouldn't have had to deal with no drawdown. The most you would have dealt with was 6.8 pips. But hey, we had a valid reason to get into this trade. I mean, either way, no matter which direction you would have took it, you would have won this trade. But that right there is your confirmation. All right? I'm going to show you guys another example, but let me see if anyone has any questions. When you say flat bottom, that means no wick, right? Correct. No wick. Not a little one, not a big, no wick. Just means it's flat. It's flat. So you want a flat top, you want a flat bottom. So I'm going to show you an example because I actually took a trade earlier with this cross here, which, wait, was it this one? Boom. So we can stop that. Oh shoot, we just got that. Yeah. So here's another example. This was a trade that I took earlier. This one was a lose. This one was a loss. But so here's what happened here. I'm not gonna hold you. I took this at a weird position because price is kind of at the support area, but I took it anyway. But so we had a cross. Oh, actually, let me get these numbers out for you real quick. Let me give you these numbers out real quick. So I'm gonna type this out for y'all. Moving average crosses EMA going up by moving average crosses, EMA going down, sell. All right, that's that. Then you have different time frames you can use this on. So your stop loss will be between 15 to 20 pips. That's what I usually do. I usually go 15 to 20 pips. All right. Now, when you're on the 1 hour time, 20 to 30 pips. All right. We're on the 4 hour time frame. You're looking for up to 50 pips. And we're on the daily time frame. You're looking for up to 75 pips. All right, guys. So make sure you have this down. And the moving average cost of the EMA going up, buy. Moving average cost of EMA going down, sell. Your stop loss will be between 15 to 20 pips when you take one of these trades. We're on the 1 hour time frame. You're looking for up to 20 to 30 pips to take profit. We're on the 4 hour time frame. You're looking for up to 50 pips to take profit. And we're on the daily time frame. You're looking for up to 75 pips to take profit. Now, just because I say, hey, we see a cross in the 4 hour time frame, that means I need to go for 50 pips. Nah, guys. If you feel comfortable going for 35, go for 35. If you feel comfortable going for 30, go for 30. If you're comfortable just going for 20, go for 20. These are just examples of where, since the momentum is so strong, of the amount of pips that you can capture. All right. So, guys, make sure you have that. All right. So, boom. So, and also, too, when you use this, kind of just like use your trading knowledge. Like, I'm not going to hold you. Looking back at this trade that happened, so I was on the 4 hour time frame, right? And I took this cross. And looking at where I took it, this is a kind of a bad trade, right? Because I'm kind of at the support area where price is consolidating, but I kind of thought I was going to get the push down. So just know that not every, whoever that is, can you please mute your mic, please? Let me just mute it again. So just giving you an example of what I'm viewing now. Like, I took this trade at a pretty bad spot, but I kind of felt it. I kind of been having a great week. So I'm like, whatever. I see the cross. I'm just going to take it, And I kind of see that this was kind of a bad spot to take it in. But I honestly thought that due to that cross, momentum was going to push price down. So just understand, guys, you're going to have losses sometimes. But if we look in the past here, all right, again, this was clean. This is just off the 4 hour time frame, right? So look, we had a cross right here, right? Another example, you have the cross right there. When we see the cross happening, again, we go over to the Hakanashi, right? Switch it over. All right. And we look over here to our left. We had the sell at the cross. We had a flat top. That's all I really do with this strategy, y'all. And I just simply wait for my crosses. Now, just for those of you who may be new, if you have Gold Cup actually has a product called the 450 moving cross, where it actually tells you when the crosses are happening for certain pairs on their time frames. So if you're someone who has Gold Cup, make sure you leverage that. And so when the crosses are happening, all you have to do is you're going to get the alert on your phone. So then all you have to do is switch over to the Hakanashi and check whether you see a flat bottom or a flat top to confirm your trade. And that's simply it. That's simply all you're doing. Like, it really is that simple for that, guys. And it works with pretty much everything. I only use it for Forex pairs. I do know there's a way to use it with crypto pairs, but I'm not telling you guys that. I'm only focusing on the Forex pairs because that's all I focus on. That's a good question. I do not know. I don't think so. Hey, I don't think so. Yo, Kacey.
Yep.
Kacey, do you have the pro version or the free version of?
I have the free version.
All right, can you get the Hakanashi?
Yes.
I believe. Okay, yeah. So you guys, you don't need the pro version to have it. You can have the free version. So boom. So yeah. So even look right here. It's really trade earlier, but boom. You guys had a crosshair earlier on all JPY, and this is for the newest person. We had a cross. All right, you had a little line sticking up here, but then you had the next candle that had a flat top off the sell. So either you would have took it off of that, or you would have took it off of this one. Could have been up to you. And since it's on the 4-hour time frame, this dropped for near 50 pips. So that dropped 50 pips. So you could have caught 25, could have caught 30, 40, or you could have caught the whole 50. It's pretty much up to you, but it really is that simple. Let's just see. When do we have another cross? We have another cross for a minute. On the 4-hour time frame, crosses aren't going to happen that much. So those crosses are a little more special. Probably going to get back into the other one later to see all, but check this out. AJ as well. We had another cross here, guys. We have the cross, flat bottom. Yup. 4-hour time frame. We could go for 50 pips. Or maybe you said, I'm going to hold the thing because you had other confirmation. That's one thing too, guys. When I use this moving average cross, usually I do sometimes just look for the cross, but when I'm taking other trades or I'm using my other strategies that I have together, which can be for another Zoom call, I combine everything I've learned together. So this is something that I use for confirmation when I take, maybe if I'm trading smart money or I'm trading a break and retest, I'll look. So, that really is the 450 moving cross, guys. But the reason I like this way is because I like to have the Hakanashi as momentum to verify to get into that trade. Just so happens the last one that I took didn't go my way, but the strategy is pretty effective, guys. And if you're a new person, like, it's really easy to just set this up on your trading view and really just take these trades. Like, these trades are hitting every second. Like, just look at the crosses happening. So, one thing too for my new people. So you may be wondering, like, how do I like, when you get in a trade, how do I know where my TP is going to be at, right? So guys, we have these tools as well called the short position and long position, right? So when you have the short position, right? So here we had the sell, we have the cross, cool. Now let's say you got in right here at 82899. What you're going to do is you're going to come to the left, right? You're going to come to where it says short position tool. The short position tool, right? You're going to put it at your entry. So you just put it on there, but I'm going to show you how to edit it. 82899 was my entry, right? So look, put this tool on here. Go to settings, right? And you could pretty much just type in everything, right? So your entry was 82.899. So let's put that in, 82.899. Cool, that's our entry. Now, we know that we can get 50 pips off the 4-hour time frame, right? So cool. No matter what you want to go for, it really doesn't matter. Profit level. Let's say you want to go for 20. So you put in 200. The last number is absent. 20 pips. Cool. It already told you your take profit right there. All right, but let's say you wanted to go for 40 pips. All right, cool. Go for 40 pips. Oops. 40 pips caught right there. Take profits 82.500. All right, I want to go for 600. I want to go for 60 pips. Just type in 600. You would have caught the 60 pips. Now your stop loss, remember. All right, that's important to set. So you could put 15 pips. So it'll be 150. Boom. Stop loss is just there for you. Maybe you're going for 20 pips stop loss. That's right there for you. Or maybe you want to do 30 pips stop loss. That's right there for you. So that's how you guys set up your short position. And I'll show you the opposite side for when you buy. Because we had a buy on this side. And it's just the same thing, guys, just on the buy. So, all right, cool. We have the cross right here. Get the long position. Boom. Put it there. All right, and you could just enable it. So this didn't go for 50 pips, but oh no, yeah, it went for 40 something. If tips, because I really don't think that the strategies and everything are what makes you a great trader. It's about the little things. So when you're in like 20 pip profit, maybe 15 pip profit, put your stop loss to break even. All right. When let's say you use a bigger lot size on one of these trades, if you don't know how to take partials, you need to go ask in the group chat and ask whoever brought you in, they should know how to take partials, or go ask in your group chat, whatever group you're part of, and ask, hey, how do I take partials? How do I move my stop loss to break even? Because it's the little things like that that protect you from losing money, right? That save you from your trade. Because let's say you went for 50 pips on this trade, right? But we were only able to get, this trade only went for 47, right? But you were trying to go for 50 pips. Now you were well in profit, but let's say, boom, price reversed. Let's say, it comes to hit your stop loss. But you were well over 40 pips. Why didn't you move your stop loss to break even? So if price did reverse, it's a risk-free trade. All right. So it's just little things like that, guys, just to be aware of. But like I said, I'm more of a confluence trader where I like to have multiple reasons for why I get into a trade. So I sometimes throw that in with the moving average, but moving average cross is a great tool to use for beginners because, as you see, it's very effective. I would say if you can, kind of focus more on you could use the 1 hour time frame, but as you see, the 4 hour time frame pays really well. So if you can get that cross on the 4 hour time frame, hey, you're going to be pretty good. You're going to be pretty good. Like, these crosses are legit. They happen. You just got to be patient, But the more you learn, guys, the more you earn. And that's pretty much that with that. I think that's really it for that. That's the way I use it, and hopefully it can help you guys catch some pips. Just checking out this last one. Yeah, I'm not going to hold you. I'm probably going to get into this again, guys, because I do feel that this trade is going to sell. I want to see all CAD drop this. So, and that doesn't mean it's a signal. Not get in. That's not a signal, but I'm just saying I do see myself probably getting to this later just because I see the cross. So, but yeah. Like I said, make sure you have this part down. This is the most important thing before I pass it back off to Kacey. But before I get off, guys, if you have any more questions, let me know. I'm about to pass it back over to Kacey, but make sure you have this, guys. Hey, actually, curiosity, Kacey.
Yep.
For the stop loss, would you say 15 to 20 pips, or would you increase that up to 30? Because I'll be honest, like, I'm someone who's comfortable using a 30 pip stop loss, but what would you recommend?
So me too, I'm comfortable with using 30 pips. That's what I do for all of my teacup trades, but for my MA crosses, I usually do about 25.
Okay. All right. So, guys, yeah, as a trader, you're just going to find what's comfortable for you. This is just what's recommended, but yeah, I myself and someone, when I take a trade, I know my trade is going to be 30 pip stop loss all the time, which I feel like I should have put that there. We done got stopped out, but it's all cool. But yeah. I'm going to pass it back over to Kacey, y'all, to go over what she's going to do. But like I said, thank you for having me on this call, Kacey. Hopefully you guys got some good nuggets. Oh yeah, no problem, y'all. Definitely. And if you guys have any more questions, you can hit me up in the group chat and whatnot. I'm about to pass it back over to you, Kacey. Host. All right, cool.
Okay. All right, so I'm going to start sharing my screen. But while I do that, can you guys drop some ones in the chat for Tariq? Thank you so much for hopping on this call and sharing your value and your knowledge to the rest of us. I know when I saw him do this for the first time, I was like blown away. So definitely use the other confirmations as well. Okay, so I'm just gonna go over the regular teacups really quickly with you guys. That way we can hop on to C. John's call right after this. So basically, what Tariq showed you guys was one of the easiest strategies. That one's actually probably easier than the one that I'm about to show you. So teacups is one of the strategies that I do along with the MA crosses, and that's what I'm going to show you guys today. It's a simple 4-step strategy, but like right here, okay. I don't know if you guys took Tariq's NZD USD call a while ago, but like all of those just hit take profit. Like all the NZD pairs, they just hit. But anyway, back to teacups. So I'm actually just gonna clear my screen, get rid of everything on it. That way nothing gets confusing. Gonna hide my indicators, get rid of my lines. So essentially with this strategy, there's only 4 steps to it. The only thing about teacups is they do take a while to form. They can take anywhere from a couple days to a couple hours, just depending on the time frame and like how the market's moving. But the key thing is just to be patient with them. But it's super simple. It's only 4 steps. I'm going to write them out for you guys as well. Okay, so the first step with the teacups is to look for a bullish and a bearish candle. That's step number 1. So I'm going to be focusing right here in this area, specifically on this bullish and this bearish candle. And if you've been on this session, like any of these sessions before, you might be able to see what happened and where the teacup formed. But I'm going to be focusing right here on this candle and this candle. So step number 1 is to find our bullish candle and our bearish candle. Our bullish candles are the blue ones and our bearish candles are the red ones. So here I have my bullish and my bearish candle. Step number 2 is to look for a lower low or a lower high. So basically what that means is I'm looking for another, hold on, I cannot type in, sorry, or lower high. So what that means is we're either looking for another bearish candle or another bullish candle that closes out lower than the first bullish candle. So right here we have a lower low. But what I mean by lower high is this can be another bearish candle. It just has to be lower than the first bullish candle. So here's our bullish candle and then our bearish candle, and then we have another lower low, which is another bearish candle. So to keep it even simpler, just look for the pattern red or blue, red, red. So blue, red, red. So if you're just starting with teacups, that's what I would focus on. Don't worry about the lower high, just focus on the lower low. That way it doesn't get too confusing. So we're just gonna focus on the lower low. So I have my first 2 steps done. So I have step number 1, which is look for my bullish candle and my bearish candle. And step number 2 was to look for my lower low or another bearish candle. So step number 3, those are pretty much like those are pretty much the major steps in this. Next, all you have to do is find your take profit and your stop loss. But first, we're going to place a horizontal line on the tops of the bodies of the first 2 candles. The first 2 candles. And I'll show you guys what that looks like. So right here are my first 2 candles. I'm going to place a horizontal line over here. Place it right on top of them. And then something that I do is I change the color to white. So whenever I see a white line on my chart, that's going to be my entry. And so I'm just going to write them out, like the entry, my stop loss, and take profit, but don't take this because it already happened. So this white line, it's attached to a number. So if you look all the way to, somebody's unmuted. Okay, got it. So if you look all the way to the right of the screen, you're going to see that this white line is attached to a number, and it's attached to 1.74264. So that number then becomes my entry. And once I have my entry, then I move on to step number 4, which is to find my take profit and my stop loss. And the way that I do that is I measure out the amount of pips. So let me zoom out a little bit. Okay, that works. I'm just gonna measure out from that white line, from that entry line, I'm gonna measure up a 30 pip stop loss. And I have the 30 pip stop loss on all time frames for teacups. So whether it's the 1 hour, the 4 hour, or the daily, it's always gonna be 30 pips. And then something I personally do again is I change it to red. And then what I do again is I go from the entry line, the white line, measure down 30 pips, and then place a horizontal line at the bottom of the box, and then change it to green. So let me zoom back in. Can't see my stop loss. Okay. So for this, let me just edit this again. So if I'm looking at the red line, that number is attached to another number. It's going to be 1.74582. And then for the take profit, the green line is attached to a number, and that number would be 1.73954. So that's how I get all of that. Let me just zoom back in. That way I can show you guys another, or not really another way, but how you can see it better. So right here off of this bullish candle and this bearish candle, that's where I got my entry. So here's my entry. So the reason it's called a teacup is because if my entry is right here at that white line, I'm expecting the market to come back around and form a cup shape. So it's kind of like this little arc right here to follow this shape, come back up, and then go back down. And you can see we were entered right here off of this large candle right here, and then came down to take profit. So right here would have been the handle of the teacup, and I don't know if you guys can tell, but it kind of does form a teacup, so that's why it's called the teacup. And another thing that I do, oh sorry guys, my laptop is going to die, is another thing that I do is I have my EMA and my MA lines on it as well. So like Tariq was saying, whenever the EMAs cross, you're looking for a certain amount of pips. So whenever the EMAs cross, that can sometimes be an indicator for me to pull out of a trade or to cancel a teacup. Because if I'm on the 1 hour and my MA's cross going up and my line, we'll just say, pretend this white line would have been my entry and the MA's cross right here. If this on the 1 hour, we're looking for about like 30 pips take profit on an MA cross going up. If this is my entry and this is the cross, it's just gonna blow past that and go to my stop loss. It's gonna like blow past, hit my stop loss, and then I'm just gonna be taken out of the trade because teacups are sell limits. So we're looking for a sell, not a buy. And that MA cross going up is an indicator for a buy. So that one kind of wasn't the best example, but let's see. I don't want to take up too much time because there are other calls going on tonight. But that's basically what I'm trying to like clarify in a way. So I use the MA crosses to signal whether or not to cancel a teacup, like cancel a pending teacup. Because if the MA crosses are going up and I'm looking for a sell on a teacup, then it's just going to hit my stop loss and like take me out of the trade. So does anybody have any questions on that? Okay, so no questions, I'm assuming. Okay, so that's pretty much all I wanted to go over. I'm not going to go over the inverted teacups tonight, just because there was a lot of information kind of thrown at you guys, and I don't want to overwhelm anybody. But this recording will be dropped into the chats. Ooh. Sorry, I don't know what happened. It will be dropped into the chat. That way you guys can go back and watch it and study what Tariq was talking about when he was looking for the flat bottoms and the flat tops on the Hakanashi candles on the MA crosses, and to see how a teacup actually looks. So I'm going to stop sharing my screen. If you guys have any questions, feel free to DM me, message me on Telegram, anything. I'll be happy to answer any questions. Feel free to reach out to Tariq too with any questions about the MA crosses. But thank you guys so much for hopping on this call. I know you guys, your time is valuable, so I really do appreciate you guys hopping on this call. But yeah, make sure you guys are on the next call, which is in like 15 minutes, that Sejan's hosting. It's going to be a great call as always, so definitely hop on. And thank you guys so much again.